Hey guys, welcome in this new video. I hope that all of you are doing great. So in this video, we will talk about, is the stock market crash over, right? Are we ready to go back up and make new highs, or are we going to eventually come back down? So I'm really excited to hop on this video. I think that you guys will learn a lot, and I will try to break down everything that I'm currently looking at. So I will not hold back on the content in this video and try to bring you guys as much value as I can. Just before we start, if you enjoy these type of videos, please just leave a like. I would really appreciate it, and also make sure that you are subscribed to the YouTube channel if it's not already done. That would help me, just grow more the channel and therefore help more people in their trading. All right, so let's actually analyze the markets together, and I will, as I said, try to really explain you guys everything that I'm looking at right now in the markets, and what are the key elements that we need to consider into our analysis. Okay, so first of all, whenever that I do an analysis like that, for example on an index, what I like to do is, of course, separate my analysis in two parts. So I will first of all look at the fundamentals, and after that I will look at the technicals. Okay, and so you could either start with your fundamentals or your technicals. It doesn't really matter. I would say the important thing is just to be kind of objective when it comes to these things and be able to see both sides of the equation. That is also very, very important. So here what I want to do is start with the fundamentals. Okay, because of course right now the fundamentals are a lot more important than just the technicals themselves. So the whole situation, the economy, politics, and things like that are a lot more significant nowadays, especially because of the crisis that we are currently going through. And yeah, so let's start there. So first of all, on a fundamental basis, right? As I said, the first thing that is really important to do whenever that you do your analysis is always be able to see the two sides of the equation. So when we will look at it from a fundamental perspective, we need to try to make scenarios for the upside and for the downside, right? And so that's really, really important to do. A lot of people don't do this kind of exercise mentally, and they are biased by their own opinion. So for example, if you think that the stock market is going to go down, your brain will naturally have a tendency to select the information that confirms your main idea. So if you think that it's going down, you will most likely look for information that confirms what you think, which is that the market is going down. But of course, as I said, we need to stay objective and we need to look at the facts only, okay? And that is the reason why we need to make scenarios both for the upside and for the downside, regardless of what we think could happen. So let's start with this, right? If we look at the fundamentals for the upside, so why could the stock market go up, right? Like, what could be different reasons of why this might just continue to go up? Because of course that is possible, right? Like, the markets are never just showing one possibility. We can always do multiple things. So why could this go up? Well, one of the main reasons that we can look at right now is what the Fed is actually doing to support this market, which is quantitative easing, right? Or QE, right? So just to explain you guys very briefly what is quantitative easing, well, it's basically a program where they print money and they buy financial products in order to sustain the economy in that type of periods where it is under pressure. Okay, so that is very simplified, but of course that is kind of what you guys need to understand. So they are buying financial products and they are putting money in the market and printing money to support the market so that it doesn't just crash totally, right? And so that is one of the main reasons why this market has been going up for the last couple of weeks, just like we can see around these levels. Another reason as well that I think is pretty relevant actually for this time being is that we have the Trump election that is coming in just a few months, right? And so of course Trump, what he would like to see is the market going up right before the election so that it gives him a lot more credibility. Because if the market is falling right at the end, right, of his 4-year window of presidency, it's not going to help him, of course. So the best thing for him is if the market is going up, and so he will try everything that he can to actually make this go up, at least to the election period, right? So that's really important to understand as well. He wants the market to go up. Now, of course, the question is, will the Fed and Trump be able to support this market, right? So these are really the two main reasons of why this has been going up and why it could, well, not technically, but logically, let's put it that way, keep going up if we look at it from this perspective, okay? Now, if we switch over and look at the other side of the equation, so on the fundamental basis, why could this go down? Well, first of all, we are in a bear market, which means that in a bear market, one of its main criteria is that when we have a down move, the down move is usually pretty strong, just like we saw right over here. And after that, we also have pullbacks that are relatively strong, and then we could keep going down. So that type of correction here that we might be seeing right now, that's completely normal, okay? And it's not something to panic. So of course, when we have a crisis or a recession or whatever, the market will not just go down, one straight line and then go back up. Like, it's not how it works, right? It goes, down, up, down, up, down, up, and overall, right, over the long term, you go down. But that is, the tendency of how it moves. So it's not surprising at all that we are getting a pullback like this. And that's the reason why I did not try to sell at this low right here, simply because, well, to me, that did not make sense for this to just keep going down and down and down. At some point, we needed to have a pullback, which is what we are getting right now. So we are in a bear market. That is one thing to keep in mind as well. Now, if we continue in the direction that I said, which is fundamental for the downside, well, of course, this whole situation with the coronavirus is not over, right? We're still just at the beginning of this whole crisis. There's no vaccine or no, there's nothing to cure the virus just as yet. Everyone pretty much is still in lockdown, and we're just at the beginning of this, like it's not over at all, and the damage on the economy are already there, okay? Like, there is a lot of things that has already happened in the last couple of weeks and couple of months that put a tremendous pressure on the overall economy. And one of these things, just to give you guys an example, is unemployment, right? In the last 6 weeks in the United States, 30 million people asked for unemployment. I don't know if you guys realize how much that is, but that is a huge number, right? It's around 10% of people who asked for unemployment in 6 weeks, right? So if we are just at the beginning of this crisis, and if lockdown will continue, and if people have to stay at home, well, this number will keep going up. And if we are already at 10% in 6 weeks, well, it could get even worse than that, And if we look back at the other financial crisis, so for example, 2008, well, big unemployment is around, 10-15%. So we're already in kind of the, extended range where it's kind of, I would say very uncertain and very risky just after 6 weeks, right? So that's very concerning. After that, if we look at other data, of course, we have some of the worst, economic data that we ever had in the history of mankind, right? So that's also pretty relevant and pretty important to keep in mind. After that, another thing as well that is interesting to take a look at is oil. So as you guys know, I've made a video about this, but oil fell under zero in reality, and it is still under huge pressure. So I will not re-explain all of this. There's already a video where I talk about that. But oil is also a very big factor in how the economy is doing, simply because, well, it's a huge industry, right? It takes a big part of the economy, and that is one of the most important industry if we want to understand what's going on in the economy. And so just the fact that this is under huge pressure right now, well, what could this do, right? If we think a little further, if oil is under a lot of pressure and if it's trading at very low cost, what will happen? Well, a lot of businesses will not be able to survive through this, and they will not be able to prosper after that. So, businesses will close, more people will lose their job, and you see how it's just a cycle effect, right? So if a lot of people start to lose their job, just like we are seeing right now, and just like we will probably see in the future. So less people have a job, less people have an income, so less people consume, right? Less people buy things, so it slows down the whole economy, and it's just a whole process, right? Like thinking about all the small businesses, like people who have, a little shop, or a little gas station, or like whatever it is. Like think about all those small businesses who rely on their customer, who come day after day, week after week. If everyone is losing their job and under financial pressure, well, no one will come in your shop, right? So if you have a small businesses, you are actually under a huge pressure, and so this, as I said, has a cycle effect. So if you lose your business or you lose your job, you don't consume as much as you probably did before, and it just go on and on and on. So that was basically the fundamental picture as it is right now. So of course there are many other points that we could talk about, but here I think I really gave you guys the main points that I'm looking at personally, and what I think is actually the most relevant topics to talk about. And so on a fundamental basis right now, if we look at it, as I said, on an objective standpoint, if we look at the reasons why it could go up and the reasons why it could go down, well, to me, the reasons why it could go down outweigh the reasons why it could go up, at least if we think at it logically, right? Because if we really think about it, the two reasons that I said why it could go up, so quantitative easing and Trump election, well, those reasons are kind of a illusion, right? It's not supported by the actual economy. Quantitative easing, they're just putting money on the market to make it go up and so that it doesn't fall. But it's not a reflection of what is actually going on in the world, right? And the Trump election, well, it's the same idea, right? So to me, the reasons of why this market could go up on a fundamental basis are pretty weak, I would say. And the pressure is mostly to the downside. So that is basically the outlook of my fundamental analysis. Now, if we switch to technical analysis and take a look at the chart that we have in front of us, well, for the upside, there's nothing much that I can see, to be quite frank. On a technical basis, I don't see why this will go up. So as I said, if it does go up, it will be because of the kind of ideas that I shared with you on a fundamental basis. But is this upside tradable? Well, personally, for me, no. Okay, so if you have a other trading style than I do, or if you look at other things than I don't look at, maybe that for you there are some opportunities to trade this to the upside. But as I said, for me, there is no trade to the upside, at least on the medium term. Okay, so of course, within this pullback here, you could have taken some trades to the upside, but this was purely based on technical analysis and very short-term trading, which I don't do, especially when it comes to indexes, just like that. Okay, so on a technical basis for the long term, I don't really see anything that really will hold the price, as I said. So if it goes up, it will be more because of the fundamentals and not so much because of the technicals. Now this could change, right, over the time if we see another structure developing, if we see a change either on a fundamental basis or on a technical basis, then after that, there might be some opportunities for the upside. But at the current time, when I watch a chart like that, it's not telling me upside, it's telling me a lot more downside. So I think that we can clearly see this right now. We have a strong impulse, we have a correction, which, as I said, is completely normal in a bear market. And so the natural way of how this could develop, I think, is simply that when this pullback here is over, we go for one more down. Now, how this downside will develop? Well, essentially, I could see a couple of different ways of how it could develop. So first of all, if we repeat what we got here in the first move, this could be a relatively strong downside. I think that this is possible given the situation, especially, for example, if we see a second wave with the coronavirus, or if we go back to lockdown because the situation becomes uncontrollable, then this might actually be something that we could see happening on the market. So that's definitely something to keep in mind. If not, we might see a down move, but a little more slow, that could look something like this. And after that, with this down move, we might get more upside eventually when we come back to this level right here. So those are really the two main ways of how I think the downside could take place. But overall, on a technical basis, it's looking more downside, especially that we broke out of, well, pretty much everything that there was on a technical basis. And that just by looking at the way that this is moving, to me, it's telling me more downside to come. If we look at the indicators that I have here, well, it's the same thing. It's also telling me more downside, just like we can see here, and even on the 1 hour, we can see the same picture as well. And we can see that, you know, the upside trend here, that's also something interesting, is not holding very strong, right? And what I mean by that is, well, first of all, we had this one, so this low here. As you guys can see, it broke. After that, we had this one, and it's also kind of breaking out right now. So the upside trends that we have at the moment are not really strong because they can be broken very easily, just like we are seeing right now. So now if we take, you know, these two aspects, right? So if we look at the fundamentals and the technicals and put them together, well, I guess that you guys can already tell what I'm about to say, but to me, overall, it's looking very much downside, okay? It's not looking right now to me like it wants to reverse. Now, as I said, could it reverse? Could it keep going up because of the other reasons I mentioned? Of course it could, right? It's not impossible. And once again, we need to stay objective and be able to see the two different scenarios. But if we think in probabilities, right, which is always what we have to do in trading. So if we think in probabilities, is there a higher probability for this market to rally to the upside or to make more downside eventually? Well, to me, it's clearly more downside, which means that if I ever take a trade on this, it will be mostly to the downside, because in terms of probabilities, this is what I think has a higher probability to happen than the other way, okay? Now, the last idea here that I wanted to share with you guys in this video, and I think it's very important to tell you guys this, the markets, okay, are not always rational, okay? The markets don't always make sense. Now, that is a great paradox in trading because, of course, our job as a trader is kind of to try to make sense of what we are seeing, right? So we have a chart, we have the price that is moving, and we need, through our analysis, to find some type of logic within what is happening, and then we can trade based on this idea. So it's a paradox to say that, you know, we need to find a certain logic, but at the same time that the markets don't always make sense. But that's a very important paradox to understand. So the markets are irrational. So could this keep going up even though that the whole economy is kind of fucked up at this point and that no one is working, right? And all the other reasons I mentioned. But could this keep going up? Yes, it could, right? That is not impossible. And so that is really, really important to keep this in mind and to understand this point very clearly. The markets are not always rational and they can make no sense at all, okay? And so the reason why this is important is because if you get so caught up into your own analysis and you think that this has to go down, well, if it doesn't go down, you will take a big hit, right? And you might even, you know, take a big loss or whatever, right? So it's not a situation that you want to put yourself in. You have to be really, really objective and understand that the markets don't necessarily make sense. That's really important, you know, like that's a huge part of my reasoning, I would say, especially when it comes to these situations. Just like oil going to minus $40, right? Like, does that really make sense? Is this really rational, right? Well, not really, right? When we think about it, of course, you know, it's because of the supply and the demand and the lack of storage and things like that, just like I explained in my other video, but it's not something that you would expect to happen, right? At least when you try to think about it rationally, right? And so that's what I mean, right? So that's really important to keep this in mind. So I hope you guys enjoyed this video and I hope that I made it clear with my analysis. As I said, I really tried to show you guys the two sides of the equation and what I think is more likely to happen than the other one. So as I repeated many times already, just keep in mind that both directions could happen. In reality, no one knows really what will happen with this. And that is the reason why, and I'll leave you guys with this, it's really important to always wait for a confirmation, right? I repeat this in all my videos and I will keep repeating this in all my videos because that's really important, but you need to wait for a confirmation. If you think that the market is going somewhere, you cannot trade it just because you think that it will do this. You need to wait for the market to confirm your opinion, because opinions are often wrong, right? But the market is always right, you know? So if it goes up, if it goes down, the market is right, but you might be wrong. Your opinion might be wrong, which is why you need to wait for any confirmation. It doesn't matter what you do, you always wait for a confirmation of your opinion, because your opinion in itself doesn't mean anything if the market does not respect it, right? So I hope you guys enjoyed this video. As I said, if you did, you can leave a like under it and subscribe to the channel as well, as I said, if it's not already done. And yeah, so on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye bye.